Hi guys, James Orr, founder of Decisive Trading. So today I want to talk to you about leverage, specifically over leverage. So taking too much risk on an individual trade basis in comparison to the size of your trading account. Now, this is such a big problem amongst retail traders that even the government thought they had to get involved. So they forced through some new regulations, which means that brokers have to have a larger margin size. Now, unfortunately, when the government gets involved, it's usually people behind desks who don't understand the industry and they don't really understand the problem that they're trying to fix. So all they've done is they've made it more difficult for beginner traders with the, let's say, the smaller trading account to get started trading because your deposit now has to be larger. So all they've done is they've snuffed out the little guy and they haven't really made a big enough change for people who are trading larger account sizes, which was really what they were trying to fix. Now, if it is such an enormous problem that even the government has to get involved, why do so many retail traders continue to over leverage their trading accounts? Now, I should say here that let he who cast the first stone be free from sin. When I first started trading, I over leveraged my account to the absolute maximum. I was doing idiotic things. I started off with a £2,000 trading account and I was trading between £10 and £20 per point. And I actually had it in my head that what I was going to do is spend 2 months learning how to trade. I would then spend 2 months on the charts building that account from 2,000 to 10,000, and then I would be a consistent trader who could leave their full-time employment and trade full-time. Now, when I was losing trades, I was sometimes losing 20% of my trading account on a single trade. And it's because I had the belief that by over leveraging, I could make more money faster. And that is predominantly the thing that most beginner retail traders or retail traders who are struggling think in terms of leverage. Now, if you are over leveraging your account, it is almost certainly one of the main things that is holding you back and will continue to hold you back from becoming a consistently profitable trader. When you're trading, your risk should usually be 1 to 2%. Now, sometimes there are certain retail traders out there I know of who trade larger. They trade up to 5% on a trade, but they do not take multiple trades a day. They're not sitting there taking 4 or 5 trades in a day, risking 5% every time. They're sitting there and they're looking for maybe 1 trade a week, 2 trades a week maximum. They're really patient, they know exactly what they're looking for, and they are able to trade higher risk. Now, when we come to the charts, what tends to happen is we have this belief that although loads of people are telling us that taking this high risk is a stupid idea, we know better. We are different. That is exactly what I used to think. When I was just starting out, I had that £2,000 trading account. Everyone all around me was saying, listen, if you risk more than 1 to 2% per trade, you are going to blow up your trading account. And I thought to myself, yeah, I mean, maybe they're right, but for me, it's going to be slightly different. I'm only going to risk really high until my account gets to a good size, and then I'll start to trade properly. I would do my back testing. And I would see things like, okay, I only have, with my trading system, a run of a maximum of, let's say, 5 losses in a row. So if I'm risking 10% of my account, that's absolutely fine. I'll have a 50% drawdown, I'll make it back, and I'll continue to grow my account. Those are the sort of things that retail traders do when they're starting out to convince themselves that over leveraging their account is a good thing to do and they can handle it. What they don't take into account is the fact that when you're trading live, you're going to miss certain setups. When you start to have runs of losses, you're going to start taking making emotional decisions, emotional mistakes, suffering further losses. It got to the point with me where I was taking losses, but when it was coming to my stop level, I wasn't prepared to just close the trade because it was too much money to lose. So in my mind, I would start to justify it to myself by saying, okay, I'm just going to hold on to this and hopefully it comes back to my break-even level. And then my losses would increase. They would snowball. I'd be losing half of my account on a single trade. That is what happens when you over leverage your trading account. It happens to absolutely everybody. There is no avoiding it. There's no point in thinking it's going to be different for you. There's no point in thinking, yeah, but I've already suffered all these losses. I need to over leverage my trading account in order to make those losses back. I can't just sit down and risk small amounts. It's not going to get me anywhere. That's the thinking of 70%, 80% of people out there. It's the 70 or the 80% of people who consistently lose money when they are trading. You have to treat it like a business. And now what also happens is, usually when I'm talking about leverage like this, someone will come along and they'll say, yeah, but X trader risks almost all of their account on an individual trade basis and they make consistent money. Yeah, but this trader risks 10% per trade and he takes this amount of trades per week and he's absolutely fine. Those are the exceptions. Okay? It's when you're in school and you go to play football and you have to do all the training, all the work so you can learn how to play properly. And there's this one person who can just come onto the pitch, knows exactly what they're doing, and they can play amazingly well. It's the person in class who doesn't have to study for their exams and just gets straight A's. There's always going to be an exception to the rule. But I can almost guarantee you it's not you. I thought it would be me. We all think we're special. We all think we're different. We all think it's going to be easy for us. But what actually happens is we over leverage our accounts and we end up something like this. We're drowning. We don't know what to do. We blow up our trading account. We go through these huge periods of self-loathing because we're losing all this money. I lost enormous amounts by over leveraging my trading account. If you are looking to be a serious trader, a trader who's going to do this for the long term, you have to understand that large risks on trades is basically taking a large risk with your business. We already know that emotional trading is a huge problem. You have emotions, I have emotions. By over leveraging, all you're doing is, instead of poking yourself with a stick every time you lose a trade, you're coming along with a baseball bat and you're swinging the baseball bat at yourself. It snowballs, it becomes something a lot worse. And what happens is you end up with no trading account, lost all your money, and then you either have to find a way to refund it or you walk away from trading forever. If you are looking to do this long term, I strongly suggest you risk small amounts. You treat it like a business. You understand that risking huge amounts is a recipe for disaster. It doesn't matter what this trader over here is telling you. It doesn't matter what this trader over here is doing. If they are actually trading like that, they are the exception to the rule. For you, you need to be able to deal with your drawdowns. If you have a £2,000 account, or a £10,000 account, or a £1,000 account, the reason you have that size account is it's because it's what you can afford. And if it's what you can afford, it's a lot of money to you. So what does that mean? It means when you start to lose money, it's going to hit you hard. If it's a lot of money to you, and you start taking these losses, it's a large loss to you. Even if it's only 1 or 2%, it's still difficult to take as they start to add up. But I can tell you this, it's a lot easier to suffer a 1% or a 2% loss than it is to suffer a 10% loss. You've got a much better chance of taking a 2% loss and continuing to follow your trading plan than you do from taking a 10% loss. Because if you take a 10% loss, suddenly you've got this wash of emotion, this annoyance, this fear, this desperation to make that money back. Because if you lose all this money, if your trading account goes away, how are you going to be that full-time trader? That's exactly what I went through. And one of the things I had to learn was that over leveraging my trading account was holding me back. There's actually an email I got from one of my students who has been with me for, I believe, 2 years. And he said to me in his email, he spent 18 months not doing very well. one of the things he changed after the 18th month was his risk per trade. He lowered it, and he's just had 6 months of consistent profitability because he's understanding that it's a long-term venture, it's a business, you have to treat it with respect, and you have to understand that we, the meat machine, are not able to function 100% perfectly. We have emotions, we're going to make mistakes. So we need to make it as easy for ourselves as possible. And even if you are using an automated system, you still check the system. You still look at the drawdowns. If you're risking too much and you start to see your account getting slammed, it doesn't matter who you are very likely going to make mistakes. So as we come into 2019, if you are serious about trading, please risk a proper amount of your trading account. Give yourself the best possible chance of succeeding as a trader. Risk small and be in this game for the long term. Okay guys, that's everything for this video. As always, I hope that was helpful. I hope you're all having a great trading week, a great start to the year. I'm James Orr, and thank you.